Good afternoon. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the S&P 500, being recorded on Friday, November the 28th at approximately 1:45 p.m. Pacific Standard Time. I'm actually going to begin here on the 3-year weekly chart, I believe. No, 5-year weekly chart. One step down from that monthly. I don't think it's totally necessary to kind of go over the entire long-term count, which starts basically at the grand super cycle. And just to review quickly where we are within that, I think this is all intermediate wave 5 of primary wave 5 of cycle wave 3. So within this intermediate 5th wave up, we have 5 waves of minor degree, of which 1, 2, 3, and 4 are complete. Wave 4 completing in April of this year. And so we've been in minor wave 5 from that point. And within minor wave 5, we will also form 5 waves of minute degree this time, of which I believe 1, 2, 3, and 4 are complete. That's the big change from week to week. There's that last week we left open the potential that we still had a couple of more legs down to do to put in minute wave 4. That did not come in. And so last Friday's lows became the mark for that minute 4th wave. So we're in minute wave 5 of minor wave 5, of intermediate wave 5, of cycle wave 5, of cycle wave 3. So primary wave 5 of cycle wave 3, excuse me. So based on all of that, I'm starting to now put together, and we're going to start diving down, getting inside all of this. I'm going to go down to my daily chart. And still, so I can take a look at minor wave 5. And here is 1, 2, 3, and 4 as marked. That's last Friday's lows. And that low was at 65.21. We're going to say 65.22 and round it up 8 cents. And so from that point, we're in that minute 5th wave. Now, initially, as of last week or beginning of this week, I started to detail more the build as we were building into this move. And so I'm going to come from that daily. I'm going to come down to the hourly chart. And I actually can put it on a 30-day. So that we have, there is the 4. That's hidden all the way down there. Let me pull that up just a little bit. So I don't have to kill the chart all that much. There's the 4. So within that 4, of course, we're going to have 5 waves of minuet degree. And so I had started by getting down inside this. There's 1, 2, 3, 4, 5, and then put a 1 and a 2 there, not necessarily this degree. I was marking it down even further. But as we progress, then it's easier to say, okay, this is done, and move the degrees back into alignment so that we're working from 5 waves of minute degree, of which there is minuet wave 5, and here's minuet wave 2. So we are inside this minuet 3rd wave. And again, that only comes from really starting your count and get all your 5s and everything put together, and then step back to see where are we in terms of fibs. And that would be where are we putting our fib levels that are going to be more congruent for minute wave 5. And so those are already in. And you can see we've gone through the 0.618. So I took that off today because 0.618 was down here. In fact, I'll just show you real quick. I don't leave them up. Actually, then 786 we can include as well. But I don't think this is not going to stop it, but it certainly could. It certainly could be the top for this 3rd wave, minuet wave 3. So I'll leave it up there. So minute wave 5, 0.618. I know it hadn't gone through it. Oh, my apologies. I thought it had. 0.618 for minute wave 5 would come in at 69.21.80. And so, but that I believe could just be a pause in the market. Certainly, I don't believe is going to complete it. And what we're looking for is a completion point of minuet wave 3. And inside of that, we are looking for the completion point of subminuet wave 5. So I can put one on there as such as this. So we can see that we already have some indications that the market, so again, I'm just going to bring it down, put it in the correct degree color, and so that we can see that what we're doing in terms of what is the potential, where do we start to get this overlap where we get a bunch together, and that's going to raise the probability that that area is going to be a change, there's going to be a level, there's going to be a one of the degrees of a third or a fourth or a fifth as we make our way ultimately to the top. And we're going to go over all of that just in 1 minute. Let me fill in this blank. So this is for that subminuet wave 5. We're going to leave 618 there, and then 1, and then 1.618. And yep, I think that should probably hold it. So we're going to come in this way. So here we are, minuet wave 5, minuet wave 1 and 2, adding those up, putting in some fibs. Minuet wave 3 now projects 69.60, where then the third wave would be 2.618 of the length of wave 1. And so that gets us up there. Now, coming inside, I can see pretty much we have 1, 2, 3, and 4. The other possibilities of 1, 2, and 3 is yet to come in. So that could be extending, but we're going to use it as if the 3 there, the 4 is there, and this is the 5th wave, not over yet, but part of the 5th wave moving up to put in that minuet wave 3. So what are our markers there? Our first one is 68.81, which where wave 5 would be equal to 0.618 of wave 1. The most common, of course, is that it's an equality, the 100% marker, and that's 69.27. So that starts to give us a little bit of a boost up a little bit higher into the area where I expect it. 69.27 on upward. 1.618 for this 5th wave will be 7,000. Now, that I find to be a very realistic level for the following reasons. I do think early that the market wants to go up and start testing this area, both on a gamma level and just on whatever levels that they are thinking about, or just to see how much is sitting there in terms of trying to place it as resistance that the market doesn't get above. How much sell pressure is going to be sitting there, because that's where an adjustment needs to be made, and that's where the resting order has been sitting. So there's a bunch of stuff I believe will be sitting and has been building at 7,000 for quite some time. So anything pushing through that is going to give us a strong boost, in my view. So I think, yes, there's a couple of things I think we could start to accelerate to the upside and do nothing more than just be breaking and taking things out as we go above them, because one, it's new all-time highs. One, they're major new all-time highs. One, they're new all-time highs that may not be warranted in terms of what are we going to attach to it? Because again, I think that from here, actually from this whole starting point, the market has kind of been going up strongly on options trading, on gamma levels, on just breaking through levels on both directions, by the way. And then seeing this seasonal move, which we normally get that the week, Thanksgiving week, with the holiday being there, and then a shortened day the day after, the market tends to just race itself higher, and we get volatility movement, we get all kinds of things that then focus in and help with the cause of pushing the market higher. So again, we're going to be reaching a level, of course, where the market will then make additional decisions about where we are and how can it be supported. And so we need to just listen up to see what's going to be kind of be coming out now and suggesting why all of this is happening. And we have to kind of think that a lot of this quote unquote easy money, because the market just went up, was a lot of it was due to the fact that volatility just continually got crushed for the week. It just like went lower, went lower, went lower, lower, and that produces more of the risk-on type trades. And when we broke above 6,700, in the SPX, it started to really get things rolling. When we broke above volatility triggers, that kind of aided it a little bit more. And today, the market went up and closed just below 68.50, which coming in today represented an area known as the call wall. So whether those were expiring today, I don't know. We'll find out, because that level obviously is going to switch. If a lot of it was there because of the opposition, so the gamma was sitting there waiting and it held, and if it was expiry, then it'll be gone. So the gamma will be gone. It just kind of goes away. And so we might just kind of push right up through that to finish this sub-minuet wave 5 of the minuet wave 3. So again, continuing with that thought, again, I think a lot of the stimulus right now, the focus is going to switch, because now we have the Fed meeting on December 9th and 10th. The decision is on the 10th. We have other things option-wise that are going to be coming in that could help the market kind of get its moving around. I believe that, okay, so what we have the economic data, the return of our economic data, and they're going to be pushing through a lot of reports that are overdue. So they've been waiting. They're going to get pushed out on the schedule. They're going to start to get a lot of data leading up to the FOMC meeting into the 10th of December. So remember, that's really just a week and a couple of days. So Monday is December the 1st. Amazing how it all flies when you're having fun. So we got to bear in mind that the algorithms have continued to suggest that we rally strong. This you could almost look at saying, remember I've been talking about previously that the algorithm was actually using the word surge, thrust, surge, move higher, strongly. All of these adjectives and adverbs kind of go placing in there. So with that in mind, that's what we're doing. And so what could be coming is that period where we're going to start to hit the brakes. Again, what propels the market, again, 67.50 was an important level beginning of the week. We broke above that, raised it all up to 68.50. We're sitting just underneath it. The cash closed pretty much at it. So let's see what, in terms of today's expiration, let go of that from that level, or has it been moved out, which means it needs to be dealt with next week. So again, we'll find out pretty quickly. But once that is cleared, then of course the room kind of opens up, at least for 6,900, and then of course 7,000. So let's look here. So 7,000, there's been a large gamma position sitting up there for a while. As there's down on the downside, there's been a large position sitting at 6,000 as support. So that's a pretty big window when you look at it. And we're now going from one getting to the other, and it's taking its time. Looking at the inside here, right? This is just the hourly. We have 1, 2, 1, 2, 3, 4, looking for that fifth. It could start to expand. Now, we don't get to new all-time highs until we get above 6,900, and that high is 6,920. That's the all-time high, I believe, right now. Let me just double check before I say something silly. Go back out to the daily. Nope, it actually is a little bit higher. It's 6,920. Is that what I said? I believe so. 6,920. No. Let me go one more. Go to this guy. Yeah, there it is, 6,920. So yes. So 6,920 being our all-time high. And here we start to hit it, and we have a couple of zones right there, leading up to a third, and then again a fourth. So we have it kind of stacked right around our numbers. So we have here 68.50, that's down here. Then once we get through that, we have 6,900. So this one should be easy enough to get through again. And then once it breaks 6,900, that's our first layer of resistance, and that's 6,921 to, I'm going to say 6,920 to 6,930 will be a resistance area. If it breaks, then it really raises it up to 6,960, 5,960 in the cash. And if that breaks, we're going to test 7,000. So again, I just think it could be a pause. Again, that would be third wave, though. That's resistance for the minuet third wave, 69.59. So we seem to roll ourselves or focus ourselves, and the market focuses itself at 67.50, 68.50, 69.50, and then basically probably 7,050, but we have a couple of things in the way. So the 100% marker is 71.68. So just in terms of where we are in here, I think we have a fair chance of getting to 68.81. That again, this could be moved up. This could be the third could come up to here. As I'm counting this, I'm doing my best to think, okay, that was the largest point where we actually did have a little bit of a pullback. So I put the 3 and the 4 together there, but the 3 could be finishing up here, and this is all internal for this third wave. So 1, 2, and then the third is probably could still be in progress. We could put it here, get a small decline, and then as a 4, and then we go from there. Or we get up to 68.80, we take the pause, put the third up there, put the 4 into play, maybe coming back here, maybe not, and then go again to put in the sub-minuet fifth wave to complete this third. So I think that third, 69.20 to 69.30 with upside and a good push, taking us to 69.59 or 60, 69.60, between 69.50, 69.60. That I think can complete minuet wave 3. Now, there also could be a run and a test at 7,000. We would be pretty close here. It wouldn't surprise me. And again, we're going to be moving in a kind of a different type of an atmosphere because we're above all of the levels where risk on trade sticks. So the general moves are that volatility gets sold, the VIX, and then we see them put that volatility, that money, back in through all of the underlying and the volatility of the underlying. And so again, risk on is buying, risk off is selling. So we have that whole atmosphere. And then we start to see that buildup. And again, it's through that buildup and a lot of things that happen where like, okay, we've reached a level where it's like dealers and some other folks that are sitting out there are going to be able to push it. And not necessarily to the higher levels, but get that correction in. And then we'll get, again, we get up here, we finish a minuet wave 3, we got a minuet 4, a minuet 5, and then that's it. So what does it look like up on the tops here? That's not going to work. I'm going to go back down to here and just pull it down. So we can see we're pretty well covered. Now here, this is the white is the minute fifth wave. The lavender color is the minuet, and this gold color is the sub-minuet. So it's taking it down to a fairly small degree, and I can go even further, but it just really clogs up the chart. So I'm trying to keep it clean so that we can see the internals. And I got 1, 2, 3, 4 looking for that fifth. We already gone over this. Could be the third finishing up here. Then we get a 4 and still another run. And that kind of makes sense as well because you see I have a double there. And then in the middle here, but kind of goes along with this. So we could break, spike, come back. And it still could be, yes, the market would be put up here, but it's all based on what can happen here. Now, moving higher from here. Our next group is this for this minuet third. If we ignite at the beginning of next week and at different points during the week while we're trying to finish this minuet third wave, you can see we're here, minute 5 would be equal to minute wave 1 at 71.68. Now that is, within how I'm presenting it, a point that could mark the conclusion of the minute fifth wave the minor fifth wave, the intermediate fifth wave, the primary fifth wave, the cycle third wave. So let me bring this out to the daily, right? So again, we're in that minor fifth. 1, 2, 3, 4 in a minute. We're in that minute fifth. Coming up here is on that minuet degree is 4.236% times the let me take this back down. This guy out. Bring it back down to there. If we're looking for that third wave, 4.236 is where wave 3 is equal to 4.236 times the length of wave 1 for wave 3. Not common, but I got a double. Now, so that kind of brings me into where else I could likely, when it comes turn. So in other words, it's like this is the 100% marker for minute wave 5. That's where we're saying 71.68. Yep, it could get there, stop, and collapse, and it would be complete. I would complete the minuet 5, the minor 5, all the way up. Everything else falls into place. But if it starts to flip above this with some strength, it's showing a underlying strength of the market. We're not going to attach anything to it. It's just showing that there's underlying buying strength coming from the market. So, but as we move higher into the next minor degree, fib level, it's 4.236. That's 74.78. Are these things possible? Well, this 1.618 was what comes after 100%. So if this doesn't stop it, our next level jumps to here. So you can see if we get up into there and it finishes there, then it's finishing all the way up. Besides this fifth wave, it's going to be finishing underneath, likely the minuet fifth wave. So we don't have those calculations yet. So we got to leave all of this still open and see how this all fills in between. But I wanted to make clear that this not is for the fifth wave. Yes, that's the most common, that they're equal in length. And that's where they would be. That's where minute wave 5 would be equal to minute wave 1 at 71.68. The minuet third wave would be 4.236 times the length of its first wave at 71.84. It's kind of can be a double, but we have to be careful because that's yes going to provide the resistance, but it's only finishing possibly this third wave and not the fifth, the third. Then we come back down and we go again just to finish that minuet fifth wave, which would finish this fifth wave. But then we could be heading up into here. We will get more fill-in as we go, but I'm just saying when we start to break levels that possibly could finish the whole rally, we need to be careful about how we guide this market higher. Does it have the possibility? Yes. Does it suggest that it could surge? Yes, it does. We're in uncharted territory, uncharted waters. So if people are getting short and they're getting caught, you're going to get a margin call pretty quickly. If you're leveraged out option-wise and the market is going against your position, you're going to get a margin call pretty quickly. So there are going to be a lot of reasons that things could get out of hand up at these upper levels. And a lot of it's going to be due to margin calls and just the positions themselves. So I don't necessarily, again, keeping it to the math, keeping it to the mathematics of trading, then I'm not really looking for an outside source. Now, yes, the focus can be there. I'm already talking about that. We have an FOMC meeting, 9th and 10th. The decision day is December the 10th. We have a lot of the data dumps that we're going to be getting next week. So don't forget that the first is on Monday. So we're into the 10th the following week. It's going to go fast, and we're there where we'll get these decisions, and then the market can go from there. Now, we'll go over that. We'll start talking about it because there's going to be a lot of push-pull on whatever happens. The data is going to become critical. This is all data that got withheld because the government was shut down. What is it going to show? We don't know. So this is kind of the picture that as I see it. There's a lot of room, and I believe there's still quite, I don't want to say quite some upside to accomplish. Anytime we're heading up towards 7,000, we're getting even closer. When we're talking like breaking 6,000, that put us closer than we've been, et cetera. And so it's just continuing to do that. So also, I will be keeping my eye on just how the market reacts volatility-wise. And if we could also going to be keeping very close attention on where our volatility triggers are, not just necessarily in our indexes, but we have to understand there are volatility triggers in every last underlying stock. There are gamma levels in every last underlying stock. If it trades options, it's got them just the way it is. In fact, I will be discussing those levels in silver. I don't know if any of you guys saw silver today. Silver closed up $3.48 at new all-time highs, this time above 57. So there's just things happening in our marketplace that, to me, they ring true of major highs being put in place for various reasons based on certain things that could just accumulate in a massive top in many different markets. Okay, now let's go over and take a look at the ES just to get the prices that we have. So here, same deal. There's the way forward, a little bit different count, right? WXY, XZ. And so the fourth wave finishing up on the 21st, so it was a week ago. I don't know if we've come in a week. We've come, that low, folks, was 65.25. Today's high was 68.63. In a week, we've put on over 300 points. Pretty good move without this enzyme or this push, this stimulating. Did we have anything? Not really. No real earnings, right? So we know everything's already been out. We had a couple of shuffles, we had a couple of downs, we had a couple of the AI carpets being pulled. And that, I think, is going to continue. But it actually has to do with options trading and it has to do with gamma levels. So when things start to shift there, it's going to make itself known to us through the volatility triggers. And the volatility triggers are now getting not massively apart, but we have the indexes, we have the cash, we have the futures, then we have the ETFs. So we have here in the S&P, we have the SPX, we have the ES, then we have the spiders, all based on the 500 on the SPX. So, but within the spiders, which trades, don't know necessarily if in a total it trades more than the SPX. SPX remains big daddy in terms of volume and positions and things that get put on in that index. But spiders trade an awful lot of options. And so I'll see differences in the volatility trigger. Granted, there is that calculation of the SPX and then calculating to see what the price of the spiders are going to be. And I think it usually runs between 30 to 40 points. Spiders in terms of like 700 and 7,000. I don't think that's equal. It's going to be more like 740. If we go over and we look at the spiders, I think 740 is showing up somewhere. Let me see. It is not yet, but I imagine it will. So my point being, everything seems to be coming together. And at various points, we could see a large shove higher or a large shove lower come to the ETF. before it hits our other markets, or it'll be a bigger hit in the spiders or the Qs or the diamonds or IWM than it necessarily is in the futures market or in the cash market. We will be keeping an eye on all of it. Now here in the ES, beautiful rally again. Now here as well, we got above 68.50 here. Now that same level was 68.64 here. Now let's take a look. Do you see where it got to? 68.63.75. It went up and gave it a look and ended up closing at 68.57. So it's not all that far from this call wall. So the call wall in the ES is 68.64. Again, not knowing if this was the call wall because they were the calls that were expiring today. I don't know that. We're going to find out. So here as well, 1, 2. So we're in minuet wave 3. And within that, I don't think we're done with this sub-minuet third wave. You see, because I have 1, 2, and then I have 1, 2. And then it starts to take off. And I think that was just inside. I don't think that was all of 3. So I think 3 is finishing after with this, wherever this ends up. I think that's going to be the completion point for the sub-minuet wave 3. Then we do a small 4, and then we come up again. Now, where can this 3 finish? Well, we got some ground sitting here about 68.72 to 75, 70 to 75, all right in here. 0.618 for this minuet third wave, 50% retracement for the minute fifth wave. Now, again, these remain here. Not that I'm thinking that this is where minute wave 5 is going to finish, but I think there is going to be resistance, and I think it contributes to the larger picture in terms of we're coming up in 5. What could complete here? A third wave, an internal third wave, a minute third wave, a minuet third wave. Sure, a lot of that, but in this case, I think it's going to be a sub. Unless it's finishing here, we got to come down a little bit. We're going to come back up to put the other fifth wave in, but I don't think so either. I think it's got to come up and likely get itself up here. I can put the third there, come back in a fourth, and go back up in a fifth, which couple of things I'll fill in. I'll be able to fill in the blanks up in here. If I get a fourth wave, I can hook a 1 up to it. If I get coming down in a 4, I can go quick 1 over to 4, and then I can get where wave 5 should come in. And that would be for this wave. So, and again, when I get a 3 in this size and get a 4 down, then I can run 1 to 4, and now I'm getting the ultimate. So now let's start looking upward. We have 618 for minute wave 5 at 69.57. So there's a 68.50, 69.50. This is in the ES. So we're going to have a little bit of premium in there. So 69.57. Okay, that could work. Above that, we're hitting 7,000. Now, in terms of where our larger gamma levels for the SPX is, it is 7,000. But because we're in December future, that level gets lower because premium, the amount of interest you got to pay, well, you're paying less because there's less days. So it's about 14, I think, coming in on Monday. It might be 13, maybe as low as 12. So again, when we're looking here, minute wave 3 would be 2.618 times the length of minute wave 1 at 7,027. So that kind of takes us up towards testing or just above that level, that equal level of the 7,000 in the SPX. So we're looking somewhere maybe up in here, as high as that. And that could also be the completion point for minuet wave 3. Now, moving higher, we have where minute wave 5 would be equal to minute wave 1, 72.26. That begins to ring of where we could finish all of this. Yes, we've had and continue to have 7,600. We got 7640 to 7660, and that is also minute wave 5 would be 1.618 times the length of minute wave 1 at 7660. The minor fifth wave would be 4.236 times the length of its minor first wave at 7640. So we got fifth waves of two pretty much consistent, one on top of the other. So minute and then minor, they both finish there. So I like that in terms of where our possibilities are coming in. What's going to get it there? Well, we're going to have to surge on something. So again, I think number one, we kind of run against the clock because of the data. So unless the data is going to be totally just corrected or changed, it is going to have its effect. It's going to mean something. And so that'll be next week. We get a lot of data dump. And then the following week, come Wednesday, that's Fed Day. So the algorithms continue to suggest that we might reach a high. And I think there's a lot of people bring them up. I'll give him a shout out. It's Steve Miller, and I have always known him as SLIM, SLM, because that was his acronym on the SIBO. So again, does a lot of cycle work. And he has very consistently been pointing to a cycle low and then another little pop after that. Well, we could get that cycle low. Basically, if the Fed doesn't do anything, we should start to cycle down. But I'm also thinking in terms of this count, I'm looking for minute wave 5, minor wave 5, intermediate wave 5, primary wave 5, cycle wave 3, and then the start of a cycle fourth wave correction, which I will now go out to the maximum, is that we're talking about there's ultimately where I believe cycle wave 4 should finish up. And I'm not talking about next week. I'm not talking about next year. I'm not talking about 3 years from now. I'm talking about even further. This is a larger correction that's going to take a long time, because let me tell you something, folks, it took a long time to get up here, and a lot has happened that needs to come into fruition and be arranged and be changed and be dealt with. And a lot of that is our debt. Keep that in mind. So what I will say, speaking to the large picture, and again, my opinion is that as long as the amount of money that is swirling around and being traded in all of the various everything, commodities, treasuries, forex, equities, everything has options. Everything has lots of money going around, and the number of products that are available to trade options. And so we have a lot of money being devoted to our market still. And that's the part that I think remains good news. And I continue to follow the money in terms of, is it staying in the market or is it exiting the market? And there's several ways it could exit the market. One is that we got people blowing out. But I'm going to be looking to see what those big boys, what the big dealers are doing. Are they getting hammered? It's like if you wake up one day and we got a story that there's a dealer, minor or major, that is threatening to get blown out because of a position that they have, you're going to get a market reaction out of that, because that's a lot of huge chunk of money leaving. And I'm talking like Citadel, Simplex, BlackRock, all the big boys that have their hands in everything that trades options. Okay, as long as it's there, I think we'll be okay, because we'll be able to trade. And as long as we're able to trade, we're going to have opportunity. And as long as we can make them our money, like your goals, what's going to pay you, well, we get to live another day. We get to trade another day. So that's kind of what I'm looking at. So I'm not fearing this correction. I think this correction is going to break incredible amounts through all the various emotional reactions. You got it. But it's going to happen. So I think, yes, there's my initial primary wave A low. I think that's just the 2022 low. Then we have, of course, the Globex, the pandemic low. But speaking to this low, there is potential, right? Because remember, if we're going into a cycle fourth wave, the two main structures that a correction takes. One is called just a zigzag. Now, this is where A down is 5, 3 up as a B wave, and 5 down for a C. Zigzag. That's the first. And it's very easy to recognize because there's only one, ABC 535. But if it goes to a flat, and that would be where the A wave, so primary wave A comes down in 3, and ABC. Now we're talking the possibility it's a flat. Now think about it. We top out at 7,200. We come back to the lows around 3,500. And then we rally back up towards the highs and come back down to the lows. ABC, flat. And then what's that? Cycle 4. So again, yep, that's the normal thing that I'm going to talk about is that's where I would expect it to come back, previous fourth wave. But remember, I've talked about it as well. You follow the fours. Market goes to fourth waves. When it's coming down out of the sky, those are markers. Those are just, like the radar. It's like bing, bing, and it goes there and it goes there. So I leave this here because of primary wave A. It's going to take a while. I have no idea what it's going to look like yet. Even when it begins, we're not have no idea. We're just going to take it day by day, not position, but structure by structure, so that we can see it. But there's a lot coming, folks. There really is. And so we're going to try to get ourselves up to this high, make a lot of switches. If you're a position trader, get prepared. Go. Yeah, there'll be a lot to do getting set up for what's coming. All right. I'm actually going to end it there. I'm going to bring this back down to my hourly so we can see inside there how I'm leaving that. I think next week we can get up at least up to here, do a pullback and come back up. And I'm looking that we finish this minuet third wave. Hopefully, I don't know, but maybe before the 10th. And then the 10th kind of comes in somewhere up in we're done territory. We'll see. We're getting very close. We're getting very close. And again, I don't know what that catalyst is going to be that's going to absolutely break the top and send things flying in the other direction. I know we'll recognize it. I know we'll see it. And I know it will be tradable. All right, that's it. The next update will be the morning update on Monday. Have a great weekend, everybody.